Hello everybody, welcome to another video with your man Seafood Steve in TradingLive. Yes, so this episode we will be talking about the next smart money concept tool, which is OB, order blocks. Right, OB is a short form for order block. Order block and fair value gap, they're like brothers and sisters. They're very similar in nature, and it is one of those tools or a technique whereby it helps you to understand where are smart money or institutions that could possibly accumulate their position, long or short, higher time frame or lower time frame. Order blocks exist everywhere. Accumulation and reaccumulation can happen anywhere in the chart. It depends on how you use it and how you determine which is the right order block to use. So let's get into the first slide. What is an order block? There are many ways you can define order block. In fact, in the trading universe, there are several definitions for this. However, I believe, in my opinion, it is a price level or zone if in the chart it's a specific candle. Because all we see is candles, right? In the charts, there's a specific candle, open, high, low, close, from its high to its low, a specific 1 or 2, 3 candles that presumably smart money or institutional money is coming in to accumulate or reaccumulate their positions to go long or to go short, higher or lower. And there are two types of order block. Number one is a bearish order block, and the next one is bullish order block. What are the differences? Well, bearish order block usually stays above the marketplace, is red down close candle, and is at the premium area of the market. Whereas for bullish order block is at below the marketplace, a discount area of the market, and it is an up close candle. It's a green candle. So this is a very oversimplified definition of what is a bearish or bullish order block. As I mentioned again, it's very similar to fair value gaps, FVG. Its purpose is very similar but also different. So I will give you a simple example in the next slide so that you have a better understanding. Remember, order blocks and fair value gaps are like brothers and sisters. They work in tangent. They complement each other. This is a bearish order block. So if you see my cursor, over here, this green candle, up close candle, is the bearish order block. Now, this is a Euro USD H1 candle. And we can see that this order block is sitting at the premium array. How do I know that? From this high to this low, we are above 50% of the equilibrium. If I eyeball it, high to low, 50% is somewhere here. Okay, let's say somewhere here, and we are above that. So if you're above the 50%, we are in premium array. And any order block that form in the premium array, that is a bearish order block. Now, of course, just because a green candle form in the premium array or above the marketplace doesn't mean that it's an order block. That doesn't automatically qualify it as an order block. Now, I put a number 1 or 2 and 2 here. Number 1 represents this down candle, long down candle, and that could potentially be the proof of institutional coming in. Remember, in the past few videos, institutional participation can be identified by displacement, candle displacement. Only institution and smart money, huge mountain amount, truckloads of amount of money that comes in can push Euro USD to move this much in 1 hour. Not you and me, institution, banks, central banks, commercial traders, hedge funds, and those alike. So this is institutional participation or institutional sponsorship. We want to ride the sponsorship. We want the sponsorship to be behind us and to push us forward. Right? We are not the one pushing it. They are the one pushing us. So we are piggyback on their momentum. So up close in the premium area with a down close candle like that, definitely that tells me that institution and smart money is coming in. And that will tell me that this green candle is highly likely an order block in the H1 time frame. Now, number 2 is when this down close candle, it closes here, so the next candle opens, it goes up, or potentially it could come down first, up from the high, and then could close over here. Now, when this happens, the body of the candle is closing very near to the low and away from this order blocks open. That to me is a balanced price range. Reaccumulation has happened efficiently. Price has delivered on the buy side and came to intercept the order block. And from here onwards, when the next candle opens, I would assume there could be more down move if this bearish order block is truly a bearish order block, and is evident from this candle. So, in summary, a bearish order block or a bullish order block is the last up close candle or down close candle before a huge displacement upside or downside. In this case, the last up close candle before a huge down close or displacement downwards. This is a bearish order block, some sort of formation. And it's not any Tom, Dick and Harry green candle above the marketplace. No, it doesn't work that way. So, this is H1. It may seem a bit vague to you. I have taken the liberty to show you a 15-minute. Let's break it down. What's happening inside the H1 in those candles, right? So, one H1 candle is 4 15-minute candles. And this is 15-minute. Now, this is the entire H1 green candle, bearish order block. I did not move the labeling. The labeling stays the same. And we see one 15-minute, second 15-minute, break structure, especially this low, this swing low, it breaks the structure. Again, this is market structure shift, another sign of institutional sponsorship coming in. So with this displacement like that, it should give you a green flag or green light that, okay, institutions are coming in, let's catch them, let's ride the wave when it reaccumulates again. So where it reaccumulates, here is the order block. It could come back here, yes. There's also a fair value gap over here. FVG, remember the last video, the application? Here, it poked almost 50%, close. Body close, I believe below, slightly below 50%. Excuse me, and then it rejects. And I know that this high will be held because we have the H1 order block and the 15-minute fair value gap in place as a confluence to assist me to go for a potential short position over there. Therefore, what happens next? Institutional sponsorship kicks in and we see displacement going lower, likely for this low and this low, because there are a lot of sell side liquidity below here. If this order block is not respected, it would just go above and go higher. This candle will not appear. So in a 15-minute candle, now we see clearly, oh, okay, in the H1, it's not so clear because one candle represents 1 hour. So within a 1 hour activity, right, now we break it to 15 minutes, it's so much more clearer. If this is a better view for you, use this. Otherwise, use the H1 as well. Why? Because we also want to know the higher time frame narrative. What is it doing on H1? And then we go in 15 minutes to see any other additional confluences to the H1 order block. What other factors are supporting the H1 bearish OB that could potentially hold the price and prove institutional sponsorship is indeed there, and we are riding their momentum or their capabilities to reprice the market lower. Next, a bullish order block. Opposite from a bearish order block is a down close candle. Alright, down close candle, and it's the one down close candle before a large expansion, large displacement candle. So over here, down close candle, huge green candle, up close candle. So this is very likely a high probability bullish order block. Now I understand that this order block is not exactly sitting at a discount array, but it qualifies as well because we have this factor in play. Alright, and we have a small little consolidation here. It's breaking up from the consolidation. This would be our last reference point. If we miss this run, and very likely, of course, we cannot catch every swing in the marketplace, alright? If we miss this run, the next 1 hour candle, it comes down. More often than not. There is a 60-70% chance it will come down to reaccumulate. So this is our last reference point that we can use to participate in this institutional sponsorship upside. Okay, so again I label 1 and 2. 1 because it's the displacement after a down close candle. Number 2 because the price when this candle closes here, this candle open, up, down, from the low of the hour, and it closes up here potentially. Or it could go down first, and then to the upside, and close over here, and then the next candle. So this is showing that the price came down. No matter how it delivers the downside or the sell side, it doesn't matter at all. As long as it goes down to this level, that's the most important part for us. Again, the H1 may seem a bit too simplified graph. It's not showing much details. Let's zoom into the 15-minute again. So the logo and the labels are all still the same at all the same positions. Bullish order block is from this high to this low. 1, 2, 3, 4. These 4 candles is 1 hour. This order block formation is very interesting because why? We have a down candle before it rallied. Now this down candle is what we call liquidity rate. Smart money is accumulating over here. The market is running sell side, the recent swing low. Why? Because there's a lot of sell side liquidity. Sell orders over here. The market is running it, and the smart money is buying up all the sell orders. Therefore, this happens, right? Only the smart money or institutional money can cause such a huge move in 30 minutes or within an hour. Rallies, this is displacement. What's the evidence of that? Long, big, green candle, and also it leaves a fair value gap. Those are proof of displacement, institutional sponsorship. Now, if we miss this run, so be it. Doesn't matter. Remember, do not chase. Do not ever chase. Price delivers down and hit the order block at the top portion, and the rest is history. In the 15-minute chart, we also see that there's a 15-minute fair value gap over here supporting the H1 order block. So we have two confluences here that supports the bullish OB. Similarly, in the previous slide, on the bearish OB, it does also have a 15-minute fair value gap that supports the bearish OB. It's the same concept, just flip it upside down. But over here, there's a liquidity rate. The previous one, yes, also a very tiny one. I would say this is also a liquidity rate. So it has the same characteristics. Liquidity rate, displacement, retracement into fair value gap, and order block for reaccumulation. And again, displace higher, institutional sponsorship kicking in. So we want to be positioned somewhere around here. You do not need to catch the tip of it. You do not need here. No, that's not important. You can wait for this thing to form. When it close up over here, the next candle open, any dip lower, it may not go down again, that nobody knows. But when next candle opens, it turns red, you can actually participate over there. You can engage over there. Stop loss maybe perhaps below this low or below the order block, believing that the order block will protect your position, because that is where the displacement happened and the price is now on buy program, going higher and higher and higher. Smart money has already accumulated over here. So you do not need to participate here. You can wait for this candle or this candle, it doesn't matter. These two candles, you can be a participant here and ride the wave up. You do not need to buy at the lowest low or the highest high. That's not necessary. So this is an example of the bullish order block. This is a very perfect example, the formation of the order block. Sometimes it is not so perfect like that, to get ready to be flexible. But in general, it should look like this. The rule of thumb is the higher the time frame, the better the order block. Alright? But order blocks exist in every time frame, 15 minute, 5 minute, and they can work as well as comparison to the H4. It depends on the narrative, the context, time of day, alright, day of week, the economic news, and many other factors to determine whether that particular order block in that particular time frame will actually work or not to your favor. So this is a different chart, pound USD. H4, one time frame higher, and we have a small little consolidation here. Last down candle before a massive rally, right? 4 hours. So this took 8 hours to form, likely an overnight kind of condition. Overnight. Next day, we have a 4 hour fair value gap over here. I depict this fair value gap as a red line because I do not want to make the chart too messy. This is a H4 bullish order block, the high and the low. Here's the body. Price came down to the fair value gap and almost touching the bullish order block. It's like half a pip or 1 pip difference. It's too close. Just too close. I would consider that as a tap already. And what happened next? Bam, 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 bam. Institutional sponsorship coming in. So a combination of factors over here. Bullish narrative, a return into fair value gap, H4, and bullish order block, H4, and very likely also an OTE, optimal trade entry, about 70% or 79% retracement, and rally. So a combination of those factors. Right? Can you imagine now? So order blocks exist everywhere, all time frame, across all asset classes, gold, indices, currencies, futures, it's everywhere. Similar to FVG in nature, but actually it's quite different. But they work in tangent, hand in hand. Using both, they are very useful. What helps you to choose the right order block is the same reason as what helps you to choose the right fair value gap. It's the narrative and the context, higher time frame, market structure, trend, and identifying the displacement, liquidity rates, and also the draw on liquidity. Where will prices be likely to go next? Time and price, day of week, time of day is extremely important. All those will encompass a full package, a complete way to develop a trading model or to develop a higher probability trading bias that could assist you to do well in trading. So that's all for today, and this is all about order blocks in the simplest definition. I will see you again in the next video. Thank you for your time. I appreciate it, and I hope to see you sometime again. Take care. Bye bye. Seafood Steve signing out.